Judo Bank Chief Economist Warren Hogan joins us live right now. Warren, so over to you. What do you think will happen and what should happen?
Look, I think they're aligned. I think they should go 25 tomorrow, and I think they will. It'll be a very bad look if they don't go, given the much higher inflation number we just got, and on top of that, some sort of tricky words from the treasurer when he said that the Treasury's forecasts for inflation hadn't changed. And maybe he was just trying to reassure Australians that the return of inflation to target and the getting rid of this cost of living pressure is still on track. But it was interpreted as him sort of trying to strong on the RBA. So they've sort of got a credibility issue here, where if they don't go, a lot of people in the market might perceive them to be being influenced by the political class. And of course, I think that might explain why the markets themselves aren't pricing in a rate hike tomorrow with the same conviction that the economists are.
Yeah, right. Okay, so the US seems like they're at the whole high water mark, though. How does the RBA factor that in?
Well, I think that's an important point you make. One of the reasons they need to go is that we've really lagged the rest of the world. When all is said and done, Australia's fundamentals tell us we should have higher rates than the rest of the world. And that'll be the case in 2, 3, 4 years' time. But right now, we've got much, much lower rates because the RBA is trying to navigate this narrow path. They're willing to tolerate inflation risk and bring inflation down more gradually to try and, as they say, sort of maintain the gains of the pandemic employment boom. Other central banks are not willing to take that risk, and they've been a lot more concerted in their tightening. But the problem for the RBA when they take this approach is that any upside surprise on inflation or growth means they have to respond, or else A, their credibility comes under pressure, or B, they raise the risk that they let this thing get away from us.
Yeah.
And that they ultimately have to raise rates a lot more. I mean, I think their main objective should be to avoid having to take the cash rate up towards 5.5 or 6%, which is where the Fed is right now. And I think they need to tighten a little bit more in the short term in order to stay on the narrow path.
Now, look, I know that businesses are still struggling to find workers, so therefore we need migration. But there is a conversation at the moment that I don't think any politician in the country is willing to have, state nor federal, about the level of migration and what that is doing to inflation, because these rate rises seem to be affecting people that aren't actually doing all the spending. Is that a fair assessment, Warren?
Yeah, look, there's no doubt that there's a very disproportionate impact of higher rates on different community groups in our community, and especially given the big sort of the retirement of the baby boomers and a lot of the demographic shifts going on, it's even more so than it has been in the past. But it doesn't escape the fact that we have to get our interest rates at the right level for our economic fundamentals. In terms of the immigration, look, I think the question is, why did the government want to sort of catch up the lost population from the pandemic so quickly in 2 years? Why didn't they do it over 5? I mean, I'm very pro-immigration, and I do think catching up's the right thing. But why did they surge it? Why did they do it so quickly? Because it is complicating the RBA's efforts to slow demand, slow the economy down, and of course, it is putting pressure on housing markets. The flip side, of course, is it is providing labour to an economy that is short of labour and taking some pressure off wages and inflation. So it goes both ways, but definitely this immigration story, I think, is going to continue to be an issue for our economy and politically.